Do you think your LLC is protecting your assets from creditors or the IRS? Well, let me tell you, one wrong move could leave you completely exposed. In this video, I'm going to be breaking down the most costly LLC setup mistakes that could destroy your legal and tax protection, putting everything you own at risk. All right, let's get started. Okay, so what is the number one mistake that people make when it comes to forming their limited liability company? And that's just it right there. They wait to form their company. That is, they talk to other individuals and they say, hey, don't set up an LLC yet. Don't set up a business until you're actually out there making money. Now, I've heard this many times from individuals, and I got to tell you, this is the wrong approach. If you're going to start investing in real estate, if you're going to start running a business, you do not want to wait to create your structure. In fact, you should create your structure before you take action. And the reason why is that when you're starting up a business, you're going to be signing agreements, you're going to be putting yourself out there. That is, you're not going to be signing in an LLC or a business entity that's going to protect you. And so by signing in your own name, if something were to go wrong, then you've invited personal liability back to yourself. I mean, the whole purpose in setting up an entity is to provide yourself asset protection, number one, and B, to provide yourself some tax planning. Now, if you don't have the entity set up, then you're not going to obtain either one of those. So you first want to get your entity set up before you start engaging in any type of investment or business activity. Okay, so this brings me to the second mistake that people make, and that is setting it up in the wrong state. Listen, you know, in this channel, I talk a lot about the benefits of a Wyoming limited liability company. And Wyoming is great for certain things, and it doesn't work well for others. So what you have to do is determine what type of business you need set up for what it is you're planning to invest in or where you're running your business, and then make the proper determination. Typically, if you're running an active business, let's say I was running a business where I sold repair parts or something like that for vehicles. In that case, then I'd want to set up the entity in the state where I was conducting that business activity. There's no benefit to going to Delaware, Wyoming, Nevada, or some other foreign jurisdiction if I happen to live in Denver, Colorado, and that's where I'm running my repair sales business. So you want to set up the entity in the state where you're conducting the activity or where you're owning the assets, such as rental real estate. That's where the LLC should be set up, in the state where the property is located. If you do not do this, then you're putting yourself in legal jeopardy, meaning that if someone defaults on an agreement with your business and you want to bring an action against them, you're going to be barred from bringing that action if your business is not registered in the state where you're conducting business. So in other words, you can't sue anybody. You can be sued, but you can't turn around and sue them if they've done you wrong. So make sure you're setting it up in the appropriate state. Now, the third thing that I run into is people who want to serve as their own registered agent. Listen, a registered agent, every business is required to have one when you form a limited liability company. Now, the registered agent, their sole purpose is to receive notice of process. That means if someone wants to sue your company, they don't have to sue you as the president of a corporation or the manager of an LLC or the member of an LLC. All they have to do is serve the listed registered agent that's on file with the Secretary of State. Now, you do not want to be in that position. Why? Because you don't want necessarily your name out there to let people know, hey, I'm the registered agent. And it has this appearance that you're not that serious about your particular business activity, because most businesses that are serious and they want to project that, they use a commercial registered agent. They're not having an individual that is the owner serve as their own RA. That means registered agent. So what goes with that? The fourth issue, which is when you set up your business and you are using a registered agent, you want to make sure that you're not using a PO box. So let's assume that you decide, hey, I'm not ready to go with a commercial registered agent yet, but I want to use my friend. So I'm not going to be the one. I'm going to use my brother. Well, that's fine. You could still use an individual, although I still think it's better to use a commercial registered agent. But here's the thing. You cannot use a PO box. I've seen a lot of people make this mistake where they try to use a PO box because they do not want to use their personal home address. They don't want that information listed on the public database. But the problem is that in order to be a registered agent, you have to be using a physical address. And so when I see PO box, what I'm referring to is a mailboxes, etc., or a UPS store address. Yeah, you can get it by the Secretary of State and get it filed, But if someone were to catch it, that if someone's suing you and they see that, that's going to bring jeopardy to your business structure, to that veil. So the fifth problem you have then is when it comes to choosing your business address for your new business. Now here's the thing, again, going back with the RA address, do you want to use your personal address there? Hopefully not. Your personal residence should not be your business address. You should have a physical location for your business. Now, if you do not have a physical location because maybe it's a virtual business, you're conducting business online, well then look at using a virtual business address. So here what I would look at is there are a number of companies out there. Here at Anderson, we offer a virtual business address as well for our clients where we can set you up an address where you have mail forwarding. And so you use that on your filing so it keeps your information off the public record. I have dealt with clients before that have been harassed by customers, by tenants, because they were able to look at their filing that was filed with the Secretary of State and they see that they use their personal address as the business address for the LLC that they set up, so they know how to track them down, and that's where the problems begin. So when you're setting up a business, look at using a virtual business address if you do not have a physical business location for that business activity. All right, the next one is reimburse yourself for your startup expenses. All right, guys, listen, when you start up your business, understand this, that all those dollars that you're spending to create this business, you can reimburse yourself for that, meaning it's a deduction to the business. So when I sit down with someone and we're talking about their business, the first thing I tell them is before you pay yourself out any salary or do anything of that nature, make sure you're reimbursing yourself. Every dollar that you spent to get that business set up, every legal fee, every filing fee, get that paid back to yourself because that money you're going to pay back to yourself is not considered income. It's a reimbursement. You also want to make sure that you built that into your operating agreement, oftentimes by a resolution or something, that the company will reimburse its organizers for their startup expenses. Number 7, not selecting the right type of LLC for your business. And what do I mean by that? When you're setting up a limited liability company, you have the choice between member managed or manager managed. And a lot of people get this confused. They don't understand the distinction when you should choose one versus the other because the state where you're setting up your LLC will ask you what type of business entity do you want to form. Now, I'm not going to go real deep here in the member managed versus manager managed, but I will tell you this, that typically when you're running an active business where you're dealing with the public and maybe it's just you don't intend to have a lot of employees, maybe it's just going to be you, a manager managed structure is probably more beneficial for you to hold yourself out there as the person who exercises the control over this business, and you're not so worried about having anonymity because it's you. Now, if you're growing your business and it's not based upon your personal skill set, that you're going to be hired employees and that you're not going to be the one who is the face of the business, then you might want to look at using an anonymity structure where the owner of that particular business you're creating is held by a Wyoming LLC. Now again, this is something you can view on my channel. I have lots of videos on how to create an anonymous structure. And so for those people who are setting up an active business where they don't want it to be associated back to them, member managed is typically the better structure so that the member is a Wyoming LLC or a Delaware limited liability company. So it keeps your information private. So those are the things you should be looking at when you're forming your business. If it's for real estate investing, again, typically if I was setting up a limited liability company in Ohio, I would make that member managed by a Wyoming LLC rather than manager managed because I don't want my tenants to know that I'm the owner of that particular limited liability company. And again, I don't want them harassing me. All right. The 8th problem that we run into when we're setting up limited liabilities companies is not choosing the right tax status when applying for an EIN. So when you set up your business entity and it's been recognized by the state, then you need to obtain an EIN for your business. Now, the purpose of the EIN is to allow you to open up bank accounts. And so also for people that you're dealing with, other businesses, if they have to 1099 you, that you provide them your EIN, they'll 1099 the EIN. Now, when you're making your application to the IRS to obtain your EIN, what you're telling the IRS is how you want to treat this LLC for federal tax purposes. So with an LLC, you can choose to treat it as disregarded, which means it's a sole proprietor. It could be a partnership, meaning implying that you have more than one owner. It could be an S corporation or it could be a C corporation. Now, this is where a lot of business owners make mistakes, not choosing the right tax status for the particular type of business that they're forming. For example, if I was running an active business, all right, so I'm setting up an active business and maybe this is going to be a bakery. Well, in that case, I'm probably going to lean into S corporation tax status to start off my business because I want to ensure that I'm minimizing my employment taxes and I want to make sure I'm minimizing my overall taxes in general by using that type of corporate tax structure for that LLC. Whereas if I was going to set up the LLC to own a brokerage account or to own real estate, then I may look at using a disregarded or partnership tax status because with the S corporation, it doesn't lend itself that well to those holding those types of assets. And so getting this aspect right is crucial from a tax standpoint because you don't want to get audited and you don't want to put yourself in a bad tax position when it comes down to filing your tax return because you made the wrong election. Once your business is set up and it's running, you want to make sure that you put yourself on payroll. However, payroll, when it comes to setting that up, it's only available to those business owners who are treating their business as an S Corp or a C Corporation. And this is one of the major mistakes that a lot of small business owners make when they create LLCs. If they don't set them up to be treated as an S Corp or C Corp, and I've seen this happen far too often, maybe they chose partnership or disregarded status, then they set up payroll. Listen, you're not eligible for payroll unless your LLC has elected to be treated as an S Corp or a C Corporation. Partnerships and disregarded entities cannot set their owners up on payroll. They're treated as sole proprietors for tax purposes. So, depending on what tax election you made, if you're running an active business, you should be treating it as an S Corp or a C Corp, and you need to get yourself set up on payroll and start running the money accordingly. So the 10th issue that comes up is failure to draft an operating agreement. So when you're drafting when you set up an LLC, people think, all right, I have my LLC. That's all you need to do. I have this one piece of paper that the Secretary of State has provided me. I'm ready to go out and conduct business. Well, the problem with that is that until you draft an operating agreement, you're really not in a position where you're able to conduct business because that operating agreement is what's going to provide the framework for your business as far as what type of protections you have in the event of a lawsuit, how you interact with third parties, how you interact with your business, your right to receive profits, your right to protect money from outside creditors. All of this is built into a strong operating agreement and is one of the foundational pieces when people create LLCs. Not to mention when you go to obtain loans or to set up a bank account, many times these other parties you're working with will ask to see a copy of that operating agreement. So it's crucial that once you get your LLC set up and you have your EIN, you then put together an operating agreement. Now, the 11th mistake that I find with business owners that setting up LLCs is that when they enter into agreements, they're not signing in their representative capacity. And this really relates back to when I talked about what type of LLC you're setting up. Is it member managed? Is it manager managed? The point is this, is that once you've got your business set up, quit entering into any agreements in your individual name. You always enter into agreements in your capacity as a member or manager of your LLC. And you have to make sure you're doing it right. I see a lot of people that set up limited liability companies and they sign on agreements. They'll sign their own name. Mike Johnson, member of XYZ LLC. Well, the type of LLC that he set up was a manager-managed LLC. In fact, as a member, he does not have the ability to enter into agreements. Only the manager does. Because oftentimes in those types of operating agreements, it'll state only the manager is empowered to enter into any types of agreements. So what's the problem with that? Well, when Mike entered into that agreement as the member, he's created a situation where the party with whom he's contracting can void that agreement. They could just say, hey, you can't bind us to this because you didn't have the capacity to enter into this as a member. You could have done it as a manager, but you didn't. So when you're signing agreements, you want to make sure you're signing in your representative capacity. You want to figure that out by your operating agreement, what type of LLC you formed, one of the things that I like to do when I create LLC operating agreements is to appoint either a board of directors or I will appoint officers. And so this gives you the apparent authority and the actual control and authority in the operating agreement to handle the business itself. So it's irrelevant as to whether or not it's a member managed or a manager managed LLC, because we've taken the authority and we've placed that in various officer or director provisions. And I know it sounds a lot like a corporation, but that's kind of the beauty of using a limited liability company, is that you have this flexibility. Okay. The 12th issue happens to do with bank accounts. You want to make sure that you open a bank account for your limited liability company, because that's how you're going to conduct business. And if you don't have that bank account set up, well, it's not going to work out for you very long. So you don't want to be running checks through your personal account on behalf of an LLC that you've created. Otherwise, you're opening yourself up to liability. If the business is sued, they'll look through the business, they will pierce the veil. Now, the 13th issue that you run into is setting up good books and records. Now, what I mean by that is if you are using Quicken or some other type of software, make sure you understand it and you start tracking your expenses and your income appropriately through there, so you have a balance sheet and a P&L, because this is going to be invaluable into the future as you start to grow your business. Being able to show lenders, what your income is, how much money you're bringing in, where your expenses are, to prove to them that, yes, I am serious about my business and I am bankable. During COVID and the CARES Act, and when they had all this money floating around, our firm was helping people gain access to the EIDL loans, the PPP loans, but we couldn't help everyone. A lot of businesses out there could not gain access to these funds because they did not have the proper books and records. And so you want to be in front of this. Also, it just helps you with your business in general. You know how well you're doing when you're running your business. When setting up an LLC, these are the most important things that I see where people tend to make a mistake. And as a result of not setting these up or hitting these points appropriately, it could leave you open to a creditor in the event of a lawsuit, meaning someone sues the business, they find a way to pierce your corporate veil, or if you get audited. And the last thing we want to do is go through an audit where we find out that many of the expenses we were writing off or the types of way we were claiming are treating our income from a tax standpoint is not recognized because of the tax elections we made, or worse yet, the operating agreement we drafted does not align with the tax election we made. These are crucial points when creating an LLC. I hope you learned a lot from this. And if you liked the video, be sure to hit the like button. And if you put in the comments, Clint, you said 13 and I counted 15 or I counted 9. Well, let me tell you something. I've hit 54 years of age. I've got blonde hair. Cut me some slack on that one. All right, guys, take care.